Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 13th of January 2020 and we're addressing the proposed Phase 1 of the US-China trade deal, due to be signed on Wednesday of this week. Now on Saturday we published our Gold and Silver Weekly Update, where we suggested that a trade deal was quite possibly going to be signed this week. And now, from Steve Mnuchin's comments on Sunday, this certainly appears as if it's going to be the case. Now, yesterday we also published a YouTube video entitled The Dawn of a New Era for the United Kingdom, where we highlighted an interesting article for investment professionals, stating that the United Kingdom may be the place to invest in 2020, and especially in UK equities. Well, at the time of writing, which is 15:10 GMT, we can see that the FTSE 100 index is currently unchanged, despite Asia-Pacific stocks rising overnight. Now, the reason for this rise was the announcement that Phase 1 of the US-China trade deal is likely to be signed this coming Wednesday, and this is further supported by an article published by Reuters this morning, which we shall now read. Reuters article, Monday, January 13. Phase 1 trade deal stops bleeding, doesn't end US-China dispute. US Chamber. The Phase 1 trade deal to be signed this week by China and the United States stops the bleeding, but does not end the trade war, as senior US Chamber of Commerce officials said on Monday, warning that significant challenges remain. Myron Brilliant, the Chamber's executive vice president, told a media briefing in the Chinese capital that there is, quote, clearly a sigh of relief from both sides, unquote, with the agreement expected to be signed on Wednesday in Washington, and that the depth of the Phase 1 was more positive than initially thought. Quote, implementation of Phase 1 will be important to building trust and certainty, building off the success of the negotiation, unquote, said Brilliant, who said he had been briefed on the text of the accord, but not seen it. But while the Phase 1 accord stops the bleeding, he said, quote, at the same time it's important that the two sides demonstrate a commitment to moving forward on the Phase 2 negotiations, unquote. Brilliant said there were still significant challenges, given that core structural issues at the heart of the bilateral dispute remain largely unresolved. There was still much unfinished work to do on tariffs still in place. The deal initially reached on December 13 was heralded by investors and business executives as a way to de-escalate the 18-month bilateral trade dispute that has roiled global markets and stoked worries about a global recession. But the United States has left in place tariffs on $370 billion worth of Chinese imports, and negotiations for a Phase 2 deal will probably touch on more difficult issues, including Chinese subsidies for state-owned firms and industrial policies perceived to be creating an uneven playing field. Some skeptics also question whether the Phase 1 deal can stick, partly due to the massive increase in US agricultural imports China would have to make as part of the terms that Washington says is part of the deal. End of article. So, Western markets so far have responded lukewarm to this, especially as much of the detail is as yet unknown, and also markets are now moving on to Phase 2 and wondering whether this more difficult phase will be achievable or not. Now, we would have expected both gold and silver to fall a little on the news, and this they have both done. Gold is down nearly $12 at $15.50, and silver is down 17 cents at $17.93, falling below that important $18 threshold, and we should not be surprised if they fall lower, especially if the deal is actually signed, and positive news given about Phase 2 on Wednesday. Now, the dollar index has strengthened marginally to 97.44, and sterling now stands against the dollar at $1.30 to the pound. Now, in addition, much of the fear which propelled gold and silver prices last week have abated somewhat. And according to Arne Rasmussen, chief analyst at Danske Bank, in a note to clients, quote, "Last week there was a lot of focus on the conflict between Iran and the US. However, the modest Iranian response to the killing of Soleimani and even some more conciliatory comments from Trump have taken the US-Iran conflict more or less away from the financial agenda," unquote. So it would not be unreasonable to see equity markets, and especially the US markets, to reach all-time highs again this week, unless of course some other crisis or poor economic data appears in the meantime. Now, these geopolitical concerns have not vanished, and there's still always the possibility of further retaliation from Iran. But this, at the moment, is not expected. Thank you for listening, and please, if you haven't already done so, kindly subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. Now, we admittedly stated this in our last video, but in case you haven't had the opportunity to listen to it, we wish to advise you that our YouTube statistics show that slightly less than 2/3 of those who listen to our channel are in fact subscribers, and only 20% of these have pressed the bell sign, so they are notified of our video podcasts. So many of you listening here today are in fact missing out on what could be, one day, an urgent video where time is of the essence. And therefore, if you do not press that bell sign, and it is an urgent, time-important video, by the time you decide to look at it, it could be too late. And so, if only for that reason, please do subscribe and press that bell sign. Better surely to be safe than sorry. But if you have already done so, and are already a subscriber, thank you very much indeed. It is most appreciated. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.